Alright everybody, so we have just printed a relatively interesting daily candlestick. This is what we call a bullish engulfing candle. Now we closed up just shy of 57 points, but what gives this a lot of importance is that the candlestick is showing up at the right location. You can see that the daily activity, the real body candle, has engulfed the previous day's candle. What is also happening is that we tried to establish, or the markets themselves tried to collectively push down. We saw the gap to begin Tuesday's trading session. However, once again, we saw the bulls show back up and close above the highs of Monday's candlestick. This is an extremely bullish type of candlestick that we are seeing. It is setting the pattern for potentially a bounce, which is going to happen towards the end of the week. You can also see that this rising 50 exponential moving average is still acting as support. This is the second time in about 2 weeks where we have more or less flinched around it, and we're starting to see a subsequent reaction. So again, we're starting to see, I guess, the pieces of the puzzle come together right around these rising 50s and also these macro areas of support. You can see on my screen these green boxes that I've drawn as to where we would expect price to begin to turn. Now, I guess in continuation of this, what you want to look for is the MACD to give us that definitive sign that momentum has shifted to the upside. This hasn't generated the signal yet, but again, going back to the discussion yesterday, if we are to break above this very short-term declining bearish trend line here, we can see a very abrupt, a very strong type of bounce off from that rising 50, off from this macro support to break this trend line and then to rally all the way back up to roughly 22,197 for the Dow Jones Industrial Average. What happens around this location up here is very, very important because it's going to sort of set the platform as to where we go further into 2017, whether or not we can push above this short-term swing high dating back to the beginning of August, or whether or not we start to see again potentially some reversal candlesticks up and around this 2250, 22100 area, which may lead to a larger sort of correction towards the end of September. Time will tell, but as I continue with this analysis, I'm going to move into some of the individual stocks that we look at. And again, they have set up very, very nicely in alignment with the markets, and they're really looking to aggressively move in the bullish direction, which is very good for us because we've got a lot of trades that have triggered, but have also set to trigger in our top 12 individual trade list. This is the S&P 500. A similar type of candlestick. What we have done is we've closed the gap. Now, this gap was dating back between, what was this, the 21st of August, which was Monday, and then Tuesday last week to the 22nd. So you saw this little open window where, post Tuesday's trading action last week, we more or less moved sideways in a really sort of narrow trading range. Well, given today's daily price action, we did close this window, we held the window, and we've rallied back up to the top of this sort of short-term minor bearish trend line over here. So it's going to be interesting whether or not, again, the S&P can break above roughly 2,455. If we can do this, it opens the door for the S&P to rally all the way back up to about 2,485. Now, again, continuing into the NASDAQ, you can see we gapped down. We didn't really close the entirety of the window, but another type of engulfing candle. You can see how today's candlestick engulfed all of Monday's price action as well. So this is all looking quite healthy. We're trying to bounce off the rising 100 simple moving average. The exponential moving averages are more or less moving sideways on the NASDAQ, indicating that the trend itself is sort of defunct at this particular time, or at least the trend really isn't in effect. More or less, we are moving sideways. But when we sort of transform this or sort of continue with this and pay attention to these oscillating indicators, the readings on them, you can see that the MACD is about to shift to the upside as well. This is on the daily time frame. So it's looking as though we are sort of stabilizing around these prices. There is still the potential that we come all the way back down to 6,150. But if this is the turning point, again, if we start cracking about 6,328, well, then there's a very good possibility and probability that we're going to come all the way back up just shy of 6,450 on the NASDAQ. So please think about that moving forward. Now, again, going back into our top 12 individual trade list, we've been toying with a lot of these stocks. We've been mindful that we have had to sort of sit through a little bit of short-term turbulence in the market as we sort of have moved through that natural reset type of phase that we generally get into after we find ourselves in overbought, sort of prolonged, very much so bullish conditions, where naturally the market just needs to reset. Now, it looks as though that reset has more or less run its course. Apple is starting to print above 160. You can see this. So, I mean, we've had multiple triggers on this. We've had to sort of persist through this, but we've always remained relatively constructive and very much so bullish for Apple. And it's only really today where we're starting to get some major traction to the upside. So this 160 initial entry is really starting to look profitable. It is reflecting a very profitable position. 161.59 was the second re-entry, and the third re-entry actually triggered today at 163. So it looks as though Apple is primed, pardon me, for a breakout. We've got Amazon pulling back into our green box of support. This looks like the base, which is getting put in right now. And it's also going to work in conjunction with these oscillators, which is set to flip to the upside as well. So pay attention to that MACD. What we're most likely going to see is a major rally and bounce off from the support level, coming in here at about 954 at the moment. I'm looking at targets all the way up at 1033. So pay attention to Amazon. It's looking quite good. Boeing Airlines is also starting to potentially break out. If I bring up the Bollinger Band, you can see this. We're on the precipice of a Bollinger Band breakout. You can see my triggers there. So that's a pretty interesting trade. It looks as though it's about to get moving. Baidu is still holding up above those rising exponential moving averages. We did put in sort of a bullish sort of counter attack at the moment. You can see how we gapped down and more or less traded to the close of where we were on Monday. So that's still looking relatively healthy. As long as we remain above those rising exponentials, everything is a-okay. Caterpillar, you can see this, 115, 116, 116.77. As long as we keep holding above this critical area, above 112.37, you can expect this to continue indefinitely as long as the market remains in that macro bullish trend. That is the broader markets, of course, when I reference that, by the way. So Caterpillar is looking good to sort of continue that breakout. Pardon me, I have the flu, by the way, so I'm sort of even during this very quick recording, I'm starting to lose my voice, so my apologies for that. But even going back into COP, you can see how we've really been drilling into this this sort of macro support here, around 43 bucks. I assume that we're going to hold, and over time, we're going to see this oscillate all the way back up to 47, if not all the way up to $50 a share for COP. CVX is still looking quite good. I'm not going to speak about that. Google and Amazon, very, very, very similar picture. So you can see this macro support that we're drilling back into. Again, flip to those oscillating indicators. You can see that we're starting to get buy signals across the board. You can see where my trigger is and where my target is, all the way up at $1,000 a share. It is very much so correlated very closely to that of Amazon. Goldman Sachs, I'm still very much so bullish on. So as long as we hold in this area, I'm expecting Goldman Sachs to rally to 240 all the way up to 255 over the coming months. So pay attention to that. IBM, we've been talking about the dead cat bounce. That is firmly setting up just above 140, which is looking quite good as well. So pay attention to that, with Netflix also holding its green box, very similar to Amazon and Google. You can see how these tech companies, they've pulled back, they've retraced back into their respective support areas, and we're starting to see that next sort of oscillation back up to their resistance areas. So again, you can see how the pieces of the jigsaw are coming together. And also Tesla, you can see the symmetrical triangle. I'm not sure if it is a legitimate symmetrical triangle, but you can see that we're sort of nearing the apex. And when that happens, we're going to see a full-blown Bollinger Band squeeze. So if I zoom in on the detail for you now, you can see the lower band really coming up closely to the bottom of price action. Meanwhile, you can see the top band aggressively turning down. So if you give this a couple more days, and if you see price sort of hold around 350 at the moment, and maybe even at the, sort of early into September, we're going to have a really tight Bollinger Band squeeze. And that's going to lay sort of the framework for a volatility breakout, probably in the early first week of September 2017. If you have any questions whatsoever, please email me, success@pivotpoint-trading.com. Other than that, everybody, have a fantastic week. I'll be back with you again for another market update. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.